Now, let's talk about the main subjects of today's video. Where this market's headed, what stocks are set up to do very well, which ones are not set up to do very well. Okay, so Nvidia. I posted this inside the private stock group Discord chat under the income statements tab. Here's the deal. Income statement looks great. That should come as no surprise. Everybody in the stock market knew Nvidia's income statement was going to be great. Like, there was no question. The issue is, this is a grade A income statement, not an A+. What have I told you guys is the issue with Nvidia? I told you the issue with Nvidia is it's like, this perfect student you have that gets, 100% on every test. As soon as they get less than that, you start to say, what's going on? Like, why, is there something going on? Like, why are you falling off? Like, you used to get 100% on every test and now you're not getting a 95%, you're getting a 94. Like, that's good, but what happened? You were perfect before, and now you're not perfect. That's what we're starting to see in regards to Nvidia. Cracks are starting to show up here where it's not perfect. Revenue growth, great year over year, 78%, banger. But the cost of revenue was up around 98 or 99% year over year. That's a big problem there because that's going to start to affect your margins, right? So it's like banger, but that's not good that your cost of revenue is rising at a much faster clip as a percent than your revenues are, right? So other than that, Nvidia looks really good, and that's why it's a grade A. It's just not an A+. Like, if the revenue was going up faster than the cost of revenue, it would be an A+ quarter for the company, right? Now, obviously, I sold out of my position back in the summertime in regards to Nvidia, right? And I caught a lot of flack about that at that time, right? Because a lot of people are saying, hey, Nvidia's still got great growth. They're still going to have great growth the next year or two. And what did I tell you guys? I said the writing's on the wall in regards to Nvidia here. Everybody knows already this whole story. Everybody knows great growth in 2025 and growth was going to continue in 2024. Everybody knows that. Everybody knew that. There's no question about that. Everybody knows Nvidia's products are great. Everybody knows about the CUDA software. Everybody knows about it. There's no secret here in regards to Nvidia. Like, oh, I never knew this about it. No. Everybody knows everything in regards to Nvidia. Every Wall Streeter knows it. It's the most studied stock probably in the market because it's been so talked about the last 2 years. So the writing on the wall was here in regards to Nvidia, where essentially the company was in a situation where they were priced to perfection. And if you start to come in with a little less than perfection, people are very spoiled. And they start to say, you know what, I don't really want to be in the stock anymore, right? And you start to be in a situation where everybody's looking out to 2026 and 2027 saying, I don't know about that revenue demand. And that was something I was talking about last summer when I was selling out of my position across all my portfolios. Obviously, I sold in the public account there, and I sold my other portfolios as well, 100% out of Nvidia. And the reason I did it is because I looked at it and I said, I can see how in 2026 our revenue growth is going to be very slow. Very slow. Revenue growth was great last year in 2024. I knew that. Everybody else knew that. Revenue growth very strong this year, but we're already going to start running into a major deceleration of growth as early as the back half of this year, and it's going to get a lot worse in 2026. We're talking major decelerations. I'm not talking Nvidia is going to go negative on revenue. That's a potential for 2027, by the way, but that's a debate. That's a whole debate. But 2026 is a year where you're going to see major deceleration. And so the problem with Nvidia stock here is, do people want to step in knowing you've got massive deceleration coming in Nvidia as early as, third quarter or fourth quarter of this year? And that's the issue. People don't want to step in when you got a stock that has decelerating, we're going to have decelerating growth rates on revenue, decelerating growth rates on earnings per share, and decelerating, obviously, margins have already started to play out, right? Now, what does that mean for other stocks in the stock market, right? So you got to think about the Mag 7 here, okay? Basically, there's a lot of issues with these Mag 7s now, but not all of them. Tesla has issues. They're Elon issues, right? And it's affecting the sales numbers. We know that. I've gone over that a million times, and I already told you guys that was all going to play out before it played out, and it played out, right? So Tesla has a lot of issues. We know that, right? Nvidia has this issue of they just can't win. Nvidia comes in, they beat numbers, but you know what people said? The beats weren't big enough. That was the issue. Nvidia came in with a beat on revenue and a beat as far as guide, but the beats weren't that impressive. That's a situation with Nvidia. They cannot win. They can't win right now, man. And so Nvidia's in that situation. Everybody knows about likely there's going to be a massive deceleration of growth in 2026. And do we want to step in when you got that happening? And a lot of people don't. So Nvidia's got issues. And then Apple has this whole DEI situation. They're going to be in the limelight for that. And, they're going to have all types of pressure. And now if Apple doesn't change DEI policies, Trump's going to stay after them. The supporters of Trump are going to stay after Apple. And who knows, boycott or whatever, right? And then if Apple does NDI, that's going to be, I can tell you a lot of their workforce is not going to be happy with that because they have plenty of people inside that company that are all for DEI and that sort of stuff. So, they're in a tough spot here, and especially with a higher valuation like Apple has, right? But there's other stocks that are now going to be setting up very, very well. Meta, Google, Amazon, Microsoft. You've seen major pullbacks in all four of those stocks recently, right? But people are not going to look to funnel a ton of money in Tesla and Nvidia and Apple given the situations they have there. So where money's going to funnel to when it comes to big tech is going to be into Meta stock. It's going to be into Google McDougal. It's going to be into Amazing's on, and it's going to be into Mr. Softy. And so that's where you're going to see, when you talk about any strength you're going to see in outperformance, you're going to find it in those stocks, not in the Teslas, the Nvidias, and the Apples out there, right? Which is, certainly good if you're invested into these sorts of companies, right? Which certainly I'm invested in two of those, right? Heavily, Amazon and Meta there, right? Now, I did this video, back a couple days ago, right? And I said, in that video, if you watch that video, I told you, you can't get the crash everybody wants to get, this massive market crash, right? I said, you can't get it right now because earnings and guidances of the big tech companies that drive the market are too strong, right? I shouldn't say too strong. They're too solid, right? And that's the point I was bringing up there. Now, you also can't get the stock market to blast off, and just go completely risk on and just to the moon right now because earnings and guides are also not strong enough. So they're solid, right? They're too solid to get the market down, but they're not strong enough to have us blast off this market. And so that's why you can't get this epic crash that a lot of people want. They want the S&P 500 to go down, 15, 20, 30%, whatever. You can't get it right now. You need earnings for the big dogs to all be bad. Listen, man, there's too many A-grade income statements from the big. Look at Salesforce. Salesforce, big dog. Look what their income statement. What was it, an A-, a grade at that? Nvidia's a grade A. Meta looks phenomenal. Google looks phenomenal. Amazon looks phenomenal, right? Even Apple looks too good. So there's just too solid of numbers from the companies right now to get a major stock market crash, right? And that's the thing you got to understand here. Now, this leads into AMD because I can tell you this report Nvidia just put out makes me feel better than ever about AMD. And here's why. You would be worried about AMD if one of two scenarios happen here, essentially. Scenario one is if Nvidia had a disastrous earnings report and they were like, hey, man, no one wants AI-related chips anymore. Like, demand's completely drying up for the data center business, and it's ugly out there. That'd be a disaster, right? Because then we'd be looking at AMD and be like, shoot, man, like, what are AMD's growth rates going to be in regards to data center, in regards to GPUs, in regards to AI chips over this next, couple years? So that would have been bad. That wasn't what happened. Nvidia said demand's strong, super strong, blah, blah, blah. Guidance is good, great. But the perfect scenario for AMD is it wasn't too strong. It wasn't like Nvidia came out there and just put out some crazy guidance and everybody's like, oh my gosh, like they can't get enough of these Nvidia chips. It was just a good, solid guidance. And like I said, it was maybe even a little soft than what some people were expecting out of Nvidia. That's great. That's great news for AMD. It means the demand's still there, but it's not so insane for Nvidia that everybody's just flocking to Nvidia and that's it. And so it was literally the perfect setup in regards to AMD, and I feel more confident about AMD than ever, right? Now, I did this video 3 weeks ago called Keep Buying AMD and Don't Stop, right? And I don't think people realize how well AMD is set up for this next 5+ years. I don't think they realize the work Lisa Su's done, the acquisitions she's done, and integrating those in the company, all the way from Xilinx to the ZT Systems to all the different moves she's made over this last couple of years. I don't think they realize how well this is positioning AMD for the next 5+ years. And whether these big tech companies are looking to cut cost on the chips, they're going to go to AMD. If demand continues to be strong for AI chips, they're going to go to AMD. Like, AMD is very well positioned. And keep in mind, AMD is the baby in this segment, so they're the ones with the major growth rates in this segment. And you're going to see AMD's data center growth rates significantly stronger over the next couple years than Nvidia. And so what's going to happen is Wall Street's going to start to look, and they're going to look at Nvidia that's going to start posting like hardly any growth in regards to their AI related business. As early as the back half of this year, they're going to be looking at very minuscule growth rates. And then they're going to look at AMD posting these ridiculous growth rates. They're going to be posting 50%, 100%, 150% type numbers, right? And they're going to be looking and they're going to say, oh, that's where the growth is at. And then Wall Street's going to pile in. They're going to finally start to understand AMD. They're going to go down the rabbit hole and understand everything that's going on with the company. Boom, 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 right? It's beautiful. So the moral of the story is here, AMD, I think is set up so well. It's ridiculous, right? By the way, I don't know if you guys saw this video from 3 weeks ago as well, my warning to all stock market investors. That's a very important video there. If you want to look back at a video, I laid out everything that was going to happen in regards to Palantir, Tesla, AppLovin, all these stocks that got hammered recently. I laid it all out in that video for you guys there, man. Just, a gem dropper there. I hope people listen to it. Meanwhile, at that particular time when I released that video, people were margining out, going crazy into Palantir and Tesla calls and all this stuff. And I'm like, guys, watch out. They're setting you up. You're about to get dunked on. And boom, right after that, literally the very next week, obviously, we know what started to play out there, right? Now, the other stocks that are set to benefit here are stocks that need some air to breathe, right? Because now Nvidia is not, the problem with Nvidia is it can kind of be like a vacuum. It sucks up so much money when people want to just, buy Nvidia and hold Nvidia. And it's like Nvidia or nothing else, right? Since people are not going to pile into Nvidia and it's not like, oh my gosh, I have to own Nvidia, that means money gets to go to other places. And there's some air to breathe for stocks like PayPal, stocks like Nike, which, by the way, we have now gone positive on Nike in the public account. And it wasn't that long ago, I was down 15+% on Nike. So we are now positive on that one, right? Stocks like Cheesecake, stocks like Estee Lauder, right? Which we are now positive on as well, right? These sorts of stocks have air to breathe. And so don't be surprised if those sorts of stocks continue to catch a bid and continue to get upward momentum, because people are going to look out there and say, do I really want to put money in Nvidia? No, I'm going to look for some other opportunities in the market. And those are the other sorts of stocks that will catch opportunities there, right? Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you looking at in front of you right there? That's the 6-figure Hall of Fame. Do you want to see the next one? That's the 7-figure Hall of Fame. Now, that is my private group. Those are members of my private group that have scaled to 6 figures, multi-6 figures, 7 figures, multi-7 figures in their stock market portfolio. They say you are the average of the 5 people you associate with. If you're somebody that is having trouble finding other long-term investors that are focused on building their wealth over the coming years, finding like-minded folks, look no further than my private group. We've got a tremendous amount of people. We're consistently talking with each other, learning from each other, researching companies together, sharing news about our different companies, right? We do all that inside my private group. If you would like to apply to join us in there, go down in the description area. There'll be an application down there. You can click on that and you can apply to join us in there and take your game up to a much higher level and associate with the type of folks that you actually want to associate with. Alrighty, next video up here. AI revenue isn't there and might never come.
Good to have you. Good to have you back.
Thanks
I was listening to a podcast last night with Satya Nadella, who runs Microsoft, talking about the fact that in his belief, it doesn't even need to be winner take all. There are going to be so many beneficiaries in terms of the various platforms, whether it be OpenAI or Grok 3, or you can go through so many of the different names. And that, in fact, it could add as much efficiency that we get 10% GDP growth. His words, not mine. Why do you disagree?
I mean, so far, we certainly haven't seen that. And I mean, he actually acknowledged that a couple days ago. In the long term, over the 30 or 50-year horizon, sure. But the AI that we have right now is not very reliable. Hallucinations have been a problem since the jump. They're not solved. These stupid errors that they sometimes make are not solved. Grok 3 was 15 times bigger in terms of its training than Grok 2. They had to build 2 giant new data centers, and it still has the same problems that we keep seeing over and over again. Deep learning is the technique that people are using. It's a fine technique, but it's not the answer, I think, to artificial general intelligence. And if you want that 10% GDP bump, you might need something that is more reliable, is better able to understand symbolic knowledge that humans use, and so forth. So we may need some advances before we can get to that kind of big bump. Meanwhile, with what we have, everybody tries it out, but lots of companies are disappointed when they really try it out in detail.
Yeah, I mean, the enterprise is obviously a key user question, I guess. I mean, I've been trying all of the various bots, and Grok 3 certainly did seem to be pretty impressive in many ways. What gives you doubt then in terms of the enterprise and in terms of this leap being available in the near term for many of these companies?
A lot of these things are impressive, but when you dive deep, you find that there are errors. They're often subtle. So, for example, I asked Grok 3 to give me a list of all the cities west of Denver and give me their populations, and it just left out Billings, Montana. And, the output looks clean, but you don't notice that. Then it told me there was a 5.7, I think, earthquake in Billings, Montana, like a week before, and it didn't actually exist. People aren't going to notice that at first, but if you have customers and those errors get out, that's going to cost you, right? Customers expect reliability, and I think that's been what has held people back, is the reliability is just not there.
And you're finding it as well, Gary, on the inference front. I mean, we're moving now, obviously, ChatGPT or 3.0, for example, in reasoning. You were also finding fault with these models?
Yeah, the examples I gave actually were with the reasoning-based system. So, calling it reasoning is almost like hype. It doesn't reason in the way that logicians have talked about for centuries, where you really represent something in a truly abstract form. The reason that it does depends on how close something is to something in the training data. And that means that it works better on these benchmarks for math and coding, where they can do verification tricks and data augmentation, than it does in the real world. You push it out of its comfort zone, so to speak, being anthropomorphic, and it winds up still making mistakes. Not all the time, but these subtle mistakes that get past, even when you have the so-called reasoning. I think we need some genuine advance in reasoning, probably drawing on some techniques from classical AI that are out of favor, before we get to something we can really count on.
So what he brings up here, let me be very clear, he's 100% on. Like, all these models need a lot of work still, right? And so that's why, when people kind of draw what's going on here with AI back to the internet age, it's realistic in the respect of, right? It's a bad comp if people are trying to say, well, AI stocks valued like, tech stocks were back then. Not really true, other than maybe a couple. But I mean, for the most part, like, you look at Meta's valuation, Google's valuation, a lot of these players that are going to be big players, Amazon's valuation that are going to be huge players in AI, they're not valued crazy at all. So that's a bad comp. But the comp that makes the most sense is, like, you go back to the internet age, 1998, 1999, 2000, when all those stocks were going crazy. Like, honestly, the internet sucked back then. I just got to be honest with you guys. And I know some people are super young, so you might not experience the internet back then, but I was a kid back then, and I remember, the dial-up AOL and, Windows 98 and, all that stuff, right? And the internet sucked. It was super slow. Computers sucked back then. They were really bad. It took forever to just start the dang thing up. And then you could hardly do anything. And there weren't, like, really very many cool even websites to use back then. It was more just like people went to like AOL.com and like looked at the news and like MSN, and then maybe like did email and stuff. It was like, the internet today is like 1 trillion times better than what we had back then, right? But it took a long time to get all those applications together. It took a long time to get a YouTube, to get a MySpace, to get a Facebook, right? To get then an Instagram and all these other platforms that are huge today, and a TikTok and a Snapchat, blah, 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 right? All that stuff exists on the internet today. And it's all incredibly successful and killer apps, and people love it, right? But it took a while to get there. Google. Like, no one was using Google back in 1999, right? In 2000, 2001. I didn't hear about Google until, I didn't really start using Google until probably I was in college. That's like 2000, now we're talking, that's like 2008, 2009, 2010. That's when I started using Google. I was like, oh, this is a pretty cool search platform. Before that, I would use like before that, I would use Yahoo. I think I would use Ask Jeeves back when I was in high school and stuff like that. And so, all these killer websites and apps that have been developed on the internet over the past 20 years, it took a while to get there. And so I think AI is very similar, where you're not going to see a ton of super successful companies right now, but I think over the next 5, 10, 15 years, you will. And so it's a process, right? It's a build out process, and we're still in a lot of the hardware stage. And there's going to be some software companies that, are successful here early on, like a Palantir, somebody like that. But so still a long way to go in this game, long way to go. And there will be many companies that will never really actually be very
Gary,
successful.
you said this week, I think, that the end game, in your view, for Gen AI was surveillance, and that you think we're essentially there. What leads you to that?
Well, so Doge is basically surveilling, reading the emails of, government employees. That is a huge step towards 1984. And I had said before that I thought OpenAI would be pushed in that direction for some of the reasons that we're talking about. So OpenAI has incredible personal data from people. People use it as almost like a psychotherapist or something like that. So they put in a lot of personal data, or companies put in a lot of personal or, business-related data that's quite private. And so OpenAI is sitting on all of this data, but because of the reliability problems that I just mentioned, which afflict them as much as Grok and anybody else, they aren't getting the sort of traditional customers they were hoping. The fantasy was everybody was going to use this stuff for everything. It was going to be a general intelligence, it was going to replace every employee. That's not really working out until they have some major advance in the AI. I don't think it's going to work out as well as they thought. But they can always sell the data, and that's pushing them towards surveillance.
I would just end with, OpenAI is going to be valued perhaps as much as $300 billion post money from SoftBank money coming in. They're going to do.
Yeah, just the biggest thing when it comes to that is you just have to sell people in a way that will allow them to do that, right? And so, Doge can obviously use an excuse as of like, we're making sure the money's being well spent from the taxpayers, right? No different than Tesla taking your data when you're driving around as like it's to make the systems better. So as long as you can sell it in a way that people, will buy it, you can get away with it. So
Probably 12.
No different than if they want to start putting up, cameras everywhere in a city, right? And go like what they have in China. How do you sell that to the public? Well, it's going to, murders are going to come down. There's going to be less homicides, all this stuff, right? You can just pitch it as that. Oh, we're going to cut down on crime immensely. So yeah, we need to put up a camera in your backyard to make sure no one gets in. It's just like, you gotta have a way to sell it.
Revenues this year.
And as I always say, Elon Musk is the best salesman in the history of the world, so he can sell it.
They went from 300 to 400 million weekly average users. It doesn't appear that they're suffering right now, Gary.
Yeah, but you have to look at the economics of how much it costs to run what they're doing, to do what they're doing. So, they lost money last year. They're losing money on their newest search by Sam's own testimony. They're just... this is not like the traditional internet where the cost of the software, running the software was minimal and almost everything was margin. These models are incredibly expensive to build. They're incredibly expensive to operate.
I disagree with him completely here. No, that's a bunch of baloney. Let's be very crystal clear. Like all those internet companies, pretty much all of them lost money for a long time. And in their day, it was extremely expensive. To do what Google was doing was extremely expensive. To do what Facebook did was extremely expensive in its day. It was thought of as crazy. Look at how much money they're spending and how much money they're losing. So, I don't see any difference here. Companies are spending a lot of money, right? And it's bigger numbers than we've ever seen, but same thing could have been said when Google was built and Facebook and those sorts of things, right? Amazon Web Services, the list goes on and on.